So we're on to step 6 of the loan process. And like I said before, this is the fun part. You're actually out looking at properties now and you're finding the right home for yourself. You're with your real estate agent and now the home that you want is going to be yours. So we're going to talk about different types of homes and how they can impact your actual pre-approval. So like I mentioned in step 1, you are pre-approved now and you know your dollar amount you're pre-approved for. However, in this step, we're going to discuss those different property types and how they can change that pre-approval amount. So when we initially pre-approve you, we are going to discuss your goals, whether you're looking for a condo or whether you're looking for a single family home. A single family home will not have any additional HOA payments. And that is exactly what you would be pre-approved for if that's what you were initially looking for. If you start looking at condos, you're going to have something called an HOA payment. An HOA payment is a homeowners association payment. This means that you're paying on a monthly basis, in addition to your mortgage, you're paying for community facilities, maybe streets, parks, pools. HOAs can have lots of different things that they entail. This usually only applies for condos. However, in some circumstances, you can have something called a planned unit development that does have HOAs. So your realtor is going to tell you when any of these properties do have HOA payments included. And then we'll revisit your pre-approval and just make sure everything still makes sense for you. Now we're going to talk about the difference between resale homes and new construction. Now this can be a huge difference. So on resale homes, there is a standard transfer tax rate in the state of California. It does vary slightly from area to area. However, the standard amount that is utilized when we pre-approve you is 1.25% for those property taxes. When you're looking at a new construction, those property taxes usually are going to be in the range of 1.7% to maybe 2.2%. This can make a substantial difference in your monthly payment and your qualification. So just as an example, let's say you're pre-approved for $500,000 and you go look at a new construction home. This new construction, if they do in fact have a tax rate of say 1.9%, your approval may go from $500,000 now down to only $475,000. It can make that much of an impact on your monthly payment. So it's very important that if you are thinking about looking at new construction, number 1, you let me know right away. And number 2, that you do not go into any of those new constructions without a real estate agent. Why do I recommend that? Because the realtor is your representation. So the minute you walk into that new build, that builder signs you in, and if you don't have a real estate agent present, then you are now their client. And if you do decide to proceed with purchasing that new build, then it will only be the new builder that you work for. And you know, I love the new builders and they're awesome, but you want someone looking out for your best interest, and just, you know, let's be honest, they work for the builder. So I do feel it's very, very important that you have someone looking out for your best interest. Now, when you do go into a new build, they do always require that you get pre-approved with their lender as well. And that's okay. You're not required to use their lender. However, they do try and get you to, and the builder will pay incentives only if you utilize their lender. So of course I want to earn your business and I want to take care of you. However, they will try and steal you. And with new builds, not only do they have the higher tax rates, but in addition to that, they do also have solar, because all new builds in California, you do have to have solar built on those homes. So they will offer you different ways that you can pay for that solar. Number 1, they'll tell you to increase your sales price so that way you can buy that solar system completely outright. Number 2, they will ask you to do a lease on that, and we will need to include that lease amount to qualify you. Number 3, they may ask you just to do a power purchase where they completely own the system and you're only paying for the power. So there are a lot of different ways that you can do that solar purchase. However, almost all of those will impact your qualification as well. So it's very, very important when you're out there looking for a property, don't be afraid to make offers. If it falls within what you're pre-approved for, go ahead and make those offers. But if you are making an offer, we're going to double check as soon as those offers are submitted make sure what that tax rate is, make sure there's no HOA payments or are there, and we're gonna make sure that you're comfortable with those numbers as well. So happy hunting.